Hey, welcome back to Generational Gains. This is Greg Herleen with my son Carson Herleen. 22 still, almost 23, and
almost 49, 52.
47. Anyways, it's our birthday month, but thank you for listening today at Generational Gains. Excited about today's topic. Carson, what's our topic today?
Topic today is starting a business in general, but specifically from our perspectives, you having done it multiple times throughout 20, 30 years, and me starting a couple businesses over the past 2-3 years, and the difference in our generations and how things are going on with the economies today, what it's like starting a business today versus back in the day, and some advice that you would give and I would give to those trying to start a business.
Yeah, in particular, especially for those that are just starting in the early 20s, like we both did.
Yeah.
Like, why should you, or should you even start a new business?
Well, I even say too, like because I talk to people every day. People who are, early in their 20s want to know how to start a business, but everybody wants to know how to start a business and no one knows how to. People who are 20, 30, 50, 60 all have the same level of education on how to start a business, at least in my opinion. Maybe you have a little extra experience of like some things. If you worked high up in corporate or something, sure you have more ideas, but just in general, the average person really doesn't know what to do and they're all stuck on the same steps.
Well, everyone wants to do it because social media has glamorized this.
Yeah.
Whole, like, I should do it, and it's
entrepreneurship is cool,
and you can work less, you can sleep in.
Yeah.
And a lot of maybe myths because social media makes it look really sexy when it's not so sexy. In fact, I think you work more hours when you have your own business than you do working for somebody else. Yeah.
So leads us into our first question. What was it like starting a business for you in your early 20s? And what did you maybe misunderstand about starting a business when you did?
Well, I kind of just said it actually, now that you asked that question. I think I misunderstood the freedom that an entrepreneur has. I think, and that could be the wrong word actually, because you do get freedom to pick your schedule.
Sure.
But work never ends.
Yeah.
And so I think that's the one thing I learned is I was, starting a family. You were my first kid at like 23. Mm-hmm. And although I could be there for important things and at dinner time, etc., the phone, like I had to work more than when I was working for somebody else.
Yeah.
Because everything was on my shoulders. So I think that's the biggest thing is you have to work harder and be committed to it. There is no other option. I think that was probably one of the things people say it, especially nowadays. I think people now with social media, you can hear people saying what I just said, but saying it and living it,
totally different things.
Totally different things.
Yeah.
Right?
Yeah. Agreed.
So what is it for you, Carson? I mean, you see people starting, you started a business. What do you think is misunderstood?
And after the past 5-10 years, seeing businesses succeed, fail, and for my own past few years, a little bit of success, a little bit of failure too, and just ebbs and flows. And as I'm starting actually a new business right now, how I'm doing it differently than the last couple of times, I think is going to also answer your question, is thinking very long term and thinking more, how can I do this like the right way almost? Not cutting corners, not trying to get something done just to get the sale, which I think is what you kind of have to do when you start because you need to get money in the bank. But if you have some leeway and some time to give yourself, I feel like doing it the right way, methodically, with a lot of planning and preparation and with a long-term perspective, I think is really gold. But also, you're not going to get anywhere if you just sit around and prepare and plan all day long. You have to do something. So there's a mix of that. But I feel like we often skip that part because we just need to make money, because that's typically why we want to start a business. And we forget about, I started with this partner. Do I actually want to be a partner with them in 10 years? Why did I get into business with them? Just because it was easy, because I wanted to start with the idea with them, or because it actually made sense long term? Like those type of ideas, people just dive into something and they're not prepared for what the consequence is. But that's kind of how you have to get into it, but then you can adjust as you go.
So let's talk about that right now. I mean, so let's talk about your peers. I mean, your peers are all over the board, right? Because they're at that age where some are in school, some have dropped out, some don't know what they're going to do for a living.
Yeah.
How do your peers perceive you, and or like what are their maybe misunderstandings? Because I assume you see some of that too. Like what do your peers ask you, or what do they think? Because you have peers across the board.
What's the saying? A prophet's never going to be a prophet in his own town, right? I feel like I have a mixed batch of like, oh, he's just doing whatever he's doing. Oh, he doesn't know what he's doing. He's just trying to figure it out. Or, oh, infinite banking, be your own bank. Like what the kind of messing with me. Or, oh, his dad gave him a job. But then my close friends who actually know what I'm doing are like, oh, I want to do what you're doing. How do I do it? And they're asking legit questions and trying to learn and do it also, and trying to start their own businesses in different industries they're interested in. But you get a mixed bag at 20 to 30 years old. That's just where most people are at, is there's a little bit of it all. But those who I do meet who are like, oh my gosh, I saw you on social media or I saw you speak at this event. They're like, how can I get you to teach my kids how to do this? This is so cool you're doing this. Like, you are crushing it. So it just totally depends who you talk to, but it's a mixed bag.
Yeah, I see that. I think that the best for me today, and I've seen it with you, the best like recognition or acknowledgement is when someone refers you somebody.
Totally.
It means they believe in you.
Totally.
And they believe in what you're doing and or your message or your business. Or, another one could be when someone, this is recent, reaches out and says, I want to work for you. I mean, I feel like that's also like when people reach out, even though I feel like when someone wants to work for me, it's a big commitment.
Yeah.
But at the same time, it also is like, oh, like people are recognizing my success and they want to follow my footsteps. Yeah,
I get that. So now that you've built different businesses, how or what do you think is the recipe for success starting without much experience starting a business?
I think the recipe is a few things. I think the recipe is your work ethic. And as much as everyone says it, I can't say it enough. People get lazy. People are trying to make decisions based upon a pro forma that's outlined over 5 or 10 years when really I feel like you need to put together a 30, 60, 90, and 12-month plan. Because if you can survive 12 months, like you can pay your bills in 12 months, there's a pretty good chance, like you go from like only 10% chance of making it to probably like 50% chance of making it, because the first 12 months are most critical. So
that's good advice.
I think putting together a 1-year plan and working your ass off is probably one of the most important things. I'd say also the recipe for success for me is who I'm working with, like as far as partners go, because you mentioned it, and I think that's a really, really, really good one. But also being a giver first. And I think that's probably the thing that held me back for a little bit. I wasn't a bad person by any means, but I was in it for like the sale, because I had to make the sale to make money. And if I led a little bit more in the beginning with what can I do for you to help you in your business or your situation, then I think I would have grown a little bit faster. I figured that out pretty quick after a couple of years.
How can you flip your mindset then for people who are so need to start a business, a scarcity mindset, to being more abundant and looking at others? How do you develop that skill?
Like any skill, practice. I feel like the best thing that's happened to me is I've practiced some of these skills and I've gotten good at them. But this is one of those things. Again, this is what's worked for me. The quicker I got to understand who my client is and listening to them, the better successful businessman I became. So like with you, I mean, like if I really want to work with you, I need to first lead with, where's Carson? Meet him where he is today. Like, where is he at today? Yeah. What is he struggling with, potentially financially, if I'm in the financial space or the real estate space, and how can I solve for that? So it takes practice. And and again, this practice also applies to relationships, even your wife. Like I can't tell you how many times I hear people that are like, oh, they're like struggling with their wife or they're fighting with their wife, whatever the case is. But it's like I'm sitting at dinner with them and I hear their wife saying something and they're not even listening to what their wife's saying, or they dismiss it, or they make fun of their wife. When really, like, if you're looking to build your business or your client or your relationship with your wife or a friend, you should be listening and asking questions. And it's actually hard to do. Yeah. And the more you ask questions and understand your client, the more success you'll have.
So same question for your other thing you mentioned, picking your right partner. How do you know how to do that?
Oh, that's a tough one. That is a tough one. Because especially at a young age, I feel like everyone's just excited. And
Yeah.
I would say the advice I give is my first partnership didn't work because we were two good marketers. We thought the same. We got excited about the same things. We wanted to go build. We're salespeople, marketers.
Yeah.
And we were the same. But I needed someone who was not me.
Yeah.
I needed an operational, someone that was like into the details and the finance stuff. And instead we had two marketer guys who were competing. One was doing more than the other, but then there was nothing catching and operating the business.
Yeah.
So finding someone who is strong in your weaknesses, and that took me a failure or two to figure out. So,
and I almost think the first go around, I mean, maybe the very first thing you start, maybe have a partner, but I feel like I want to go on my own more. And I feel like a lot of entrepreneurs end up leaving their partners to go on their own because they know now how to do it and they don't want to share equity with someone. They want to run it their own way. They want to control it. And the best way to have success is controlling every aspect of it. Really, you don't want somebody else's failures or mistakes or overlookings to affect you. So I almost feel like not having a partner has a lot of pros too.
Yeah, if you can do it without a partner, it's probably recommended. And that just comes from 23 years of experience. A lot of times I've had to have a partner because I needed the capital and I didn't have the capital.
Yeah.
So it really does depend. If you can get away without a partner and you can make all the decisions.
Yeah.
And the other thing is like if 1 + 1 doesn't equal 10, it only equals 2, 3, or 4, don't do it. Does that make sense? So like
the idea of synergy.
Yeah. So if you and I partner together, but we only equal 2 or 3 or even 4, there's not enough there. But if you and I together can do 10, that's a big deal. So question for you. You've been doing this for a couple of years. What is something you failed fast at? You noticed it real quick. It was a decision. It was something that flopped, something you learned big from that happened in the first couple years of you starting a business? Like something that you failed fast at and then you recognized it.
It's a good question. I don't necessarily know if this counts as all me, but the real estate company we did with some friends.
Yeah.
I was heavily involved in it and I watched it tank and it's still tanking. And that completely changed how I was buying real estate because I was copying a similar method. And the problem with the business was that there was 4 people wanting to run it that all had other businesses and no one put their time and effort into it. And it ended up flopping, which of course, if you look back on it, of course it's going to. But it changed what I was doing with the other rental properties and real estate that I was buying. Because I was like, wait, what's actually going on in the business? I got to look at it every single month. I got to know the numbers. I got to make sure I know who's doing what and have weekly meetings or whatever it is to make sure we're all on top of it.
So the failed flop that you were part of or experience was you got involved in a deal where there's partners, all who had primary other businesses.
Yeah.
And so therefore the ball was dropped because nobody was really in charge and until it got kind of out of control.
Yep.
I think that's a really good example. And you recognize it very quickly. And so you adjusted your own personal real estate business accordingly. You kept your eye on the ball. You're like, I'm not going to let that effing happen to me.
Yeah. And if that didn't happen,
experience it,
if that didn't happen, I don't know where I'd be at with my personal real estate deals because I just was like buying deals and hoping it'd work out. But now I'm like, okay, being very more careful with it. And now it's actually in a pretty good spot.
Yeah. But
it wasn't before. And so that changed how I look at any business now. I'm like, wait, if I'm starting this, like, we got to know everything going on. There's got to be specific. That's why I came back to my idea earlier where I shared about planning, thinking long term, having it all built out and understood what you're doing and the goals and mission of the business and not just getting a quick sale. That idea comes from that failure because it's like, well, no, why are we actually doing this? What's the goal 10 years from now? Do we want to partner with these people 10 years from now? Do we know what we want to do on a quarterly basis to adjust and grow? Like, how are we going to hire? Like, those ideas I didn't think about in the beginning, and I think it came from failing because we weren't on top of it.
Yeah, that's good. So, like, what else, like, do you see or have you felt in as far as entrepreneurship in young 20s? You've got other friends that have started businesses, but what any advice that you give your peers that are starting businesses? Well,
actually, the idea of you're going to fail. So if you're going to fail, fall forward. That idea of don't fall back, but fall forward. Of just if you're going to have mistakes and fail, take the mistakes and failures and put it into the next project or put it into the next company you're going to do or your next investment so that you fall forward and you continue moving forward up the path and you don't ever go backwards. A great example of that is my friend who started a company thinking it was going to be awesome, and it was subpar, not what he thought. Wasn't miserable. He paid the bills, but like it wasn't what he wanted.
Yep.
And so he sold it. And he took all of his examples and ideas and some connections to start a new business. And it's like, well, great. He sold it, made a teeny bit of money on top of what he had to pay off some stuff. But like, that's a way where he didn't just think, oh, this sucks, it's not going to work, I'm going to go back to my W-2 job. Like, no. He takes it, moved on, sold it to get some money back in the pocket, help somebody else start the company and help them run it and learn how to do it, and go do something else that helped him. And so I think it was a fantastic example of what we should be doing if we're starting businesses and failing or having mistakes.
Yeah, I mean, that's a great one. I feel like people ask me in the beginning, like, well, how did you do it? And I just shared some of the examples of how I did it and had success. There's a few other things in there as well, but my mindset and how I thought was, one, I wasn't going to fail. Like, I was going to figure it out, number one. Number two, I had nothing to lose.
Yeah.
Like, now, when I invest in something or when I do something, I have something to lose.
Yeah.
I have liability. I have got 5 kids. I have things that I could lose.
Yeah.
And so I feel like when you're in your early 20s, even early 30s, when you're starting out, if you don't have much to lose, which actually is a good thing. You should go for it. You can invest and be aggressive, and you have nothing to lose. And so I do feel like falling forward is some great advice, and something that, look, I fell forward, but I also crushed it forward. I also did some big things, and when I fell forward, I fell hard forward in my 28, 30 years old. But I had learned so many valuable lessons to go into my really next step of starting a trust company. So yeah.
And I feel like a lot of young people think, or people starting a business think, I'm doing it so I can be rich by X amount of time or age. And it's like, bro, why? That's not a reason to do something. That's not a reason to quit your consistent job and start something that you have no idea what you're doing. Like, it's not going to work. So I think people have a misconception too of like, I want to retire by 30 or 40. And it's like, well, go and if you provide enough value and you love what you're doing, that problem or that desire will no longer probably be a desire, or you'll do it faster.
Yeah, that's good. All right, so what would you tell, and I'll just say this, what would you tell your old 20-year-old self, which was 3 years ago, what advice would you give to someone you're three years older from now? 3 years ago.
I think I was very anti-school at 20. I was like, nah, I'll start a business, it's way better, school's a waste of time. Now I'm actually like, wait, I think my advice would be go to school and get a degree in what you think you can use. And while you're at school, if you get an opportunity to start something and it's like not handed to you, but like something can work, do it while you're doing school and try and start a business. No matter if you are entrepreneur-y at all, or if you have a ton of money or no money, we probably won't have much at 20, but like I would go and take any opportunity you get, go start any business you can, go try and learn about investing in anything you can. But I wouldn't drop your whole life to do it yet. I feel like some people my age do that, and I wish they didn't. I'm like, wait, just take your time to do this. Don't just go all in quite yet. Let's see how it works. And so I would, tell young people, hey, continue doing your path, but when you get an opportunity, don't be afraid to act on it.
And I would add to your comment that I think the best part of, there's a couple parts, but the best part of school is the relationship building you get.
Correct.
And
that's where opportunities will arise.
That's right. And so that's why I think school can be great.
Yeah.
I dropped out, as you know, about the same time you dropped out. And I went back 5 years later and got my degree. And I'm still glad I did that. It wasn't really for relationships at that time. It was for different things. But I think school can be good. But the advice, you didn't ask me about, but the advice I'd give to my 20-year-old self would be the importance of not just relationships and listening, how we started this podcast, but also the importance of cash in your bank account, whatever that bank account is, an insurance policy or in a bank. Why? Because I feel like one of the things I learned through some very, very hard times is the power of sleeping well at night. And I learned sleeping well at night meant having money in my bank, whatever bank you want to call it, even as insurance policy or if it is insurance policy. But when you have cash in your bank, so when you're earning all this money in your 20s and 30s, you're making all this money and you're redeploying it, take chips off the table, put it in a safe place, even if it's not earning you interest, which I know goes against all discussions, or very little interest, right? Yeah. Because when you have money in the bank, you can make good decisions and you can say no to things and you don't have to rush. And I remember my late 20s, early 30s, I was all in. Every time I made money, I put it back out. But then when I lost it all, it was so devastating after 10 years. And so if I had had more reserves, then I could have weathered the storm a little bit better, especially having young kids. So I'd say, take chips off the table. It's okay. I can tell you a person that is worth $20 million. But let's say someone's worth $20 million on their financial statement, but has $200,000 in cash. Or a guy that has $10 million in his financial statement, but has $2 million in cash, lives very differently.
It's interesting. Yeah. Hope you guys enjoyed that episode. We'll be coming back to you guys next week. Thanks for listening.